It's Tuesday, August 20th, and this is Markets Daily, hosted by me, Jen Sanasi. On this show, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. So, whether you're actively trading or simply fascinated by the volatility of crypto markets, this show is your compass to understanding what's happened, where we are, and where we are going. Good morning, everyone. On today's show, we have co founder and chief investment strategist at Banrion Capital Management, Victoria Bills. Victoria, it's wonderful to see you again.
Hi, thanks for having me on, Jen. Great seeing you again.
Of course, it's been a little while, and as uh, always, it seems like very normal in this space that in a little while, a lot has happened, but really it feels like we're kind of in the same place.
Exactly. Yeah. So excited to get into the news today. It's always an interesting ride. We're at very much a roller coaster where you think we've reached the top, but then we go back to the bottom and then we're right back where we started all over again.
I
So
know, and there's a few loop-de-loops along the way. All right, let's talk about where you're based. You are in Chicago. The DNC is happening. Talk to me about what's going on there. There has been a lot of discussion around crypto policy heading up to November's election. Just curious to get your thoughts and hear about the atmosphere in Chicago right now.
Well, the atmosphere in Chicago overall, because of the DNC, has been bustling and vibrant. I would say a lot of people are rushing downtown to catch some of the talking points that's happening at the DNC. One of the things that, in terms of crypto news or related to that I've been hearing a lot about is how Kamala Harris wants to really have a more forward-thinking policy surrounding crypto and wanting to do what we've been calling a great reset around some of the relationships that DNC, the Democratic Party, has with cryptocurrency, with crypto-based industries. So apparently, they've been in conversations with some folks at CoinDesk, as well as a few other places, to basically try and get an understanding of what are the needs of the industry and how they can better position their policies to be more proactive around cryptocurrency.
You said some folks at CoinDesk, and I think you meant to say
Coin,
Coinbase. So I just want
Coinbase,
to,
yes. Oh
yes,
God,
it,
yes,
don't worry.
Coinbase.
It's a mistake that absolutely everyone makes. But I just wanted to clarify that for
Yes.
our viewers. When you and I were chatting just before the show, I took a look at Polymarket, and Harris is now set at a 50% chance of winning the election in November. Trump is at a 49% chance. Talk to me about your perception. Are you surprised at how much crypto has become a part of the discussion around the elections?
It's definitely been a surprising conversation. It's also one that I'm surprised has not come up a lot more, actually. So when we talk about Trump's policies, for example, Trump has been very fervent and supportive of cryptocurrency. And even if we talk about, for example, RFK Jr., he was talking about wanting to establish a reserve currency where the Treasury basically buys 1 million or 4 million in Bitcoin in order to kind of establish a reserve in the same way that we do with gold. And so it's really interesting to kind of see some of the policies that are coming out of this, where there is a lot of talks about like larger backing and institutionalization. And given that Kamala is now kind of in the lead for the race, it's really interesting to kind of see again this idea of like a great reset. And it'll be really interesting to see what her policies are going forward surrounding crypto. Right now, we haven't had any concrete plans, but I'm expecting that there might be some conversations in the near future.
How do we make sense of this in the context of crypto markets? And I ask that because at the very beginning, there were many analysts who came out and said, a bet on Bitcoin is a bet on Trump. And folks were tracking Trump's chances of winning the election with the price of Bitcoin. It seems like some recent research kind of points to that not being the case anymore, but makes sense of these conversations, especially the claims that the candidates are making when it comes to crypto policy, or
Mhm.
or not. How does that relate to the crypto markets, in your opinion?
Well, regardless of the candidate or who wins in September, it's important for us to recognize where candidates stand on policies related to crypto. and having a hard, concrete plan surrounding how they want to use implementation or be making more institutionalized efforts around crypto is going to be crucial to setting the tone. And definitely one of the other things is, I mean, it's never great when politicians promise one thing and do another, but it's always important to at least have a plan surrounding it. And I think one of the things that Harris is trying to pull away from is that her camp particularly was this anti-crypto, or they were just not going to talk about it, period. So the fact that she's meeting with these big leaders in the crypto industry shows that there is going to be some sort of active push or active effort to try and do some sort of policy surrounding it. And that, to me, at the end of the day, is going to be great for just broader adoption, greater ease of implementation, and then also for greater acceptance across the US markets.
All right. Well, we're obviously going to continue to watch what happens ahead of the elections on CoinDesk. So if you're interested in that, make sure you stay tuned to this show and just check out the coverage on CoinDesk.com. Victoria, I want to turn away from the DNC right now and just talk more broadly about the markets. What are you watching this morning?
Definitely some of the things I'm watching right now are the jobless claims and PMI. As we're kind of approaching September and the potentiality of rate cuts, we know that those are some of the driving factors that are going to be underlying. So if we think about what happened in July, we had a huge surge in jobless claims of about over 280,000. But since then, as of last week, that number has dropped back to 190,000 jobless claims. So this kind of points to more of a cyclicality or seasonality that's embedded within those numbers, rather than a more, like, I think some of the worries or concerns around like a larger spread market downturn or basically the potentiality of a recession. And even Goldman Sachs and certain analysts have started to revise their numbers right now, saying that the chance of recession has now dropped down, I think, to about like 24%. So I think but what we are definitely seeing is a slowing down in the economy, which is exactly what the Fed has been trying to do for the past couple of years. And so, we're definitely feeling the pressure when it comes to interest rates, but the long-term effect of that is going to be much better for markets overall.
Well, back in July, when economists and analysts were spooked, we were talking about emergency rate cuts. They were talking about September possibly getting a 50 basis point rate cut. It sounds like now with this new data in, that you're saying that, and many are saying that there's probably not going to be a recession. But what does that mean for the rate cut that we're expecting in September?
So definitely a 50 basis rate cut is, I would say, more like a hyper situation, or something that like is not a possibility at this time. Definitely more in the 25 basis points camp. And that's also because like we don't want to overshock the system in the opposite direction. So just because we receive one piece of bad news when it comes to jobless claims, and especially unrevised jobless claims, doesn't mean that we have to take the extreme reactionary approach to say, okay, now we have to cut 50 basis points. The economy is one that is it's a delicate balance, and the Fed is always trying to balance their two mandates. So what they have to do is take a very prudent and steady approach, which can sometimes lead to conflicts or disagreements in the market because we want to see change now. But we're trying to create longer term stability in terms of how the markets look and how we kind of think about more of those inflationary pressures. Because if we basically cut 50 basis points, that means everybody's going back to market and they're spending money ridiculously, which can honestly have the opposite effect of putting us back in the same position where we started. So it's important to kind of recognize this more prudent approach to the market that we have to take.
Okay, so let's say we get that 25 basis point rate cut in September. What does that mean for the crypto markets?
So for crypto markets, definitely we'll see a rally. Particularly, I think Bitcoin is probably going to see a smaller rally around that time, as well as ETH. One of essentially what happens is that when we have more positive economic data, we kind of see more of a, like, I would say like an inverse reaction typically. But one of the things, again, like given that the economy is slowing down, Bitcoin and ETH particularly have still continued to be popular amongst cryptocurrency goers. So I think I think that that's going to have a more positive bump or a positive reaction relative to kind of what we've been seeing in the past.
I want to come back to this recession discussion for just a second because I know in July that discussion was amplified, but I've heard economists and analysts kind of talking about the expectations for a recession for a long time now. I would say like a good year or two. There have
Right.
have has been talk about a recession. What's your perspective there? If we kind of zoom out and look beyond the jobs data, are we due for a recession?
Some might argue that we're already in a recession, honestly. But what we define as a recession, or how a recession can feel to certain folks, especially as the Fed is attempting a soft landing can feel like a recession because the economy is slowing down. We're seeing a increase in jobless claims, but overall, again, the overall employment rate is still relatively high. So I believe unemployment is floating around that 4.3, 4.6%, which is very much close to what the Fed's mandate is. But again, like the way that kind of translates to the average American is cost of food is up, cost of gas and groceries are increasing. And so it feels like there is a tightening in the market because everything just feels so much more expensive. But that's just what happens, honestly, when you get into these like high interest rate territories. And now we're kind of starting to see that easing, or that potential easing, coming back into the market. So it's always going to feel like soft landings. We like to say soft landings feel like hard landings until they're not, and hard landings look like soft landings until you realize it's a market crash. So it's very hard to kind of predict because there's a lot of variables in place. And again, our ecosystem is a very delicate balance of jobs, economy, money, supply and demand, and then accounting for international trade as well. So it is always difficult to kind of plan out or kind of predict these sort of things unless there is definitely like some alarm bells in certain industries that are going off. But at this moment, at this time, no, at least as far as I can tell, there's no alarm bells or anything that's kind of systemic that can indicate to a crash, or even like again, potentiality of like a huge increase in jobless claims into the market.
Okay, I want to come back now to the volatility we've seen over the past few weeks in the crypto markets. We talked about the economic data. That could be one factor leading to that. But another factor is one we unpacked on the show yesterday. That's the yen carry trade. I just love to hear from your perspective why it's so important to be watching the yen right now, and how its impact, what kind of impact, I guess, it's going to have on the crypto markets.
Oh, absolutely. So I remember, so first off, I remember I used to live in Japan actually, and I was
Mhm.
working particularly during a negative interest rate environment in Tokyo. So basically carrying a yen was a nightmare. So we were always trading back to USD. But one of the key takeaways that I had during my time there is that because of again, I would say the Great Recession that's been happening in Japan for the past like 20 plus years, they've been in essentially like a negative cycle for a long time. That has made the yen very weak, and therefore it's been a great opportunity for individuals, folks who are in other countries, to kind of capitalize on that and basically gain additional dollars back, basically through exploiting, or kind of looking into like a weaker yen to dollar ratio, or yen to pound ratio. But of course, what we always have to remember is that like while these cycles sometimes, especially in the case of Japan, they've been in a negative interest rate environment for close to 10 years at this point, and then now they're slowly coming back to positive interest rates, and they were essentially raising their interest rates while everyone was cutting theirs. And right now they're getting, again, inverse relationship to the United States. So Japan has been raising their rates in order to stimulate their economy. I'm sorry, decreasing their rates in order to stimulate their economy. And that has resulted in a lot of people, I think, getting caught unexpectedly, not realizing just the macroeconomic factors that are at play. So what ends up happening, unfortunately, especially if you are like in Forex trading and you're not recognizing the kind of macro factors, or like not paying attention to what's going on with like the Reserve Bank of Japan, is that you basically got caught in a cycle of the cycle where the yen basically has now increased in value. It's honestly back to around the 140 range, which is, I would say, typical, or like 100 is typically, but like what we've been seeing is around the 140, 145 range. So it definitely like caused a huge loss or a spike for some folks who were in the Forex industry. And it also, but I think at the end of the day, the way that that kind of plays with crypto markets as well is essentially recognizing just the interconnectivity of these markets. And particularly when it comes to crypto and things, crypto and Bitcoin, when there's market instability, or when there's like, again, instability in countries like there is in Japan, like crypto actually is a very good surrogate for these types of markets, and is something that like should be a consideration as well. So, and because of the liquidity and kind of ease of access versus if you're trapped in kind of a forex trade for a month or 2 month contract, that's going to be a lot more harder to liquidate and get out of. And unfortunately, you'll end up kind of in the situation that a lot of people were in early August. So
All right. And Victoria, just before we wrap up, I know you do watch traditional markets, more so than crypto markets, but the lines are becoming more and more blurred as crypto gets more and more mainstream. I wanted to ask your opinion. We got the spot Bitcoin and spot ETH ETFs in the United States. We have our crypto equities that are kind of following tech stocks lately. What are you watching when it comes to crypto equities, the ETF? Is there anything that's standing out to you that folks who listen to this show should be keeping their eye on?
I've definitely been following some of the spot ETH and looking at some of the inflows that we've been seeing in those in related to spot ETH. One of my like first concerns, I would say, when I first started like reading up about spot ETH was the fact that there wasn't that basically they were not going to carry some of that 3% interest that kind of follows some of the Ethereum trades. But one of the things that I think is going to be very exciting about it is that it's going to allow for continued exposure and adoption, which is what which is what we saw happen with Bitcoin earlier this year, back in March, I believe, when they announced the spot Bitcoin ETF. Definitely a fan of BitB and the folks at Bitwise ETF, and especially kind of like their spot Bitcoin ETF when it comes to basically like wanting to get access to cryptocurrency, wanting to get access to Bitcoin, but not having to, or sorry, wanting to get access to Bitcoin, but wanting to also gain education on how cryptocurrencies and particularly how Bitcoin works. And I'm also interested to kind of see again, like as again, spot ETH, we had like a huge drop in Ethereum during actually the yen carry trade a couple of weeks back. And so that was a good time to have bought into Bitcoin, or bought into Ethereum during the time. So definitely it's a market to watch, and it's something that personally I think it'll be really exciting to see how particularly these ETFs continue to get adopted over time.
Victoria, it's always a pleasure having you on the show. Thanks so much for joining us this morning.
Thank you so much for having me, Jen.
And thank you to our audience for watching and for listening. If you love the show and you haven't subscribed yet, head on over to your favorite podcast platform and subscribe to the CoinDesk Podcast Network. If you prefer to watch, we are on YouTube. You can subscribe to us there, give us a thumbs up. I am so happy for all of you to come on this journey with me. Thanks so much for watching and listening today, and we'll see you tomorrow.